London, 1900. The richest city the world had ever seen. In its banks, the savings of entire continents. In its harbours, the wealth of half the planet. From gold in Africa to tea in Ceylon, everything, everywhere, flowed through Britain. The empire wasn't just powerful, it was unstoppable. At least, that's what everyone believed. Because behind the marble columns and the polished speeches, a quiet corruption was spreading. Not through politics or armies, but through the arithmetic of greed. The same empire that built the global economy was quietly rigging it. The profits looked infinite. The system looked flawless, until the machine that conquered the world began to turn on itself. This isn't the story of how Britain ruled the earth. It's the story of how it lost it, not to enemies or revolutions, but to its own appetite. Because every empire falls for the same reason. The moment greed becomes the goal, the end begins. And in this video, we'll trace how it happened, step by step, from the first silver coin taken from India to the final pound drained from London's vaults. Welcome to Empire Economics, where history reveals what power never admits. Picture this, London, 1900. The most powerful city on earth. Ships from every corner of the globe dock at the Thames, carrying silk from India, gold from South Africa, tea from Ceylon. The Union Jack flies over a quarter of the world's land surface. British banks control half of all global investment capital. The sun, quite literally, never sets on the British Empire. But beneath the marble facades and gleaming wealth, something sinister was already stirring. A pattern of greed so systematic, so ruthless, that it would eventually consume the very empire it was meant to enrich. This isn't just the story of Britain's fall. It's the blueprint for how the world's mightiest powers destroy themselves from within. What you're about to discover will change how you see economic history forever. Because the British Empire didn't collapse from external enemies or natural disasters. It collapsed because those in charge chose short-term profits over long-term survival. They chose extraction over investment. They chose greed over wisdom. And the consequences of those choices echo through every modern economy today. The British Empire was history's greatest economic machine. By the early 20th century, it had achieved something no civilization had ever accomplished before. Control over 400 million people, trade networks spanning 6 continents, financial dominance so complete that London determined global interest rates, commodity prices, and currency values. If you wanted to buy anything, sell anything, or finance anything on a global scale, you went through Britain first. But here's what the textbooks don't tell you. This unprecedented wealth wasn't built on innovation, productivity, or fair trade. It was built on a system so exploitative that it makes modern corporate scandals look like playground disputes. The empire had discovered something that would prove to be both its greatest strength and its fatal weakness. How to extract maximum wealth from colonies while investing almost nothing back. The numbers are staggering. Between 1765 and 1938, Britain drained nearly $45 trillion from India alone. That's 17 times Britain's entire current gross domestic product. How did they do it? Through a scheme so audacious, it borders on genius. British officials would collect taxes from Indian farmers and merchants. Then, instead of using British money to buy Indian goods, they would use those same tax revenues to purchase silk, spices, cotton, and tea. They were literally buying Indian products with Indian money, then selling those products globally for pure profit. Think about the psychology of this system for a moment. Imagine someone taking your salary, then using that exact money to buy your house from you, and then selling your house to someone else for a massive profit. That was the British model, scaled across an entire subcontinent for nearly 2 centuries. The East India Company became the vehicle for this extraction. What started as a trading corporation transformed into something far more dangerous. A private company with its own army, its own courts, and the power to set tax rates across millions of square miles. Company shareholders in London received dividends paid for by Indian farmers who could barely afford to feed their families. The human cost was devastating. When drought struck Bengal in 1769, the East India Company didn't reduce taxes to help farmers survive. They raised taxes by 10%. The result was the Great Bengal Famine, where millions died while company profits soared. This wasn't an accident or miscalculation. It was policy. The company had calculated that dead farmers were more profitable than living ones who might demand fair treatment. But what happened next would change everything. Because the same greed that generated these massive profits was about to turn inward, consuming the empire itself. The pattern was already visible in Britain's domestic economy. The Napoleonic Wars had ended in 1815, and British merchants were flush with cash from wartime profiteering. Instead of investing in sustainable industries or infrastructure, they poured money into speculation. Latin American mining ventures, Caribbean plantations, get-rich-quick schemes that promised impossible returns. The Panic of 1825 was the first warning sign. Banks had loaned money to fund investments in countries that didn't even exist. Literally, British investors poured millions into bonds issued by the fictional nation of Poyais, a supposed Central American paradise that existed only on forged maps and in the imagination of a Scottish con man. When reality struck, 12 major banks collapsed overnight. The same financial recklessness that had enriched Britain through colonial exploitation was now devouring British capital markets. This was the fundamental contradiction at British system, the heart of An economy built on extraction couldn't sustain itself once the extraction became unsustainable. Every pound drained from India represented wealth that could have been invested in Indian infrastructure, education, or industry. Instead, it flowed to London, where it fueled speculation bubbles that inevitably burst. By the 1870s, the cracks were widening. British productivity growth, which had driven the Industrial Revolution, began to slow dramatically. While the empire looked stronger than ever on, the paper underlying economy was stagnating. Annual growth rates that had averaged over 2% for decades suddenly dropped to barely 1%. The efficiency gains that had once made Britain the workshop of the world were evaporating. Why does this matter? Because what happened next reveals something crucial about the psychology of imperial decline. When an economy becomes addicted to easy money, it loses the ability to create real value. British manufacturers, accustomed to captive colonial markets, stopped innovating. Why improve your products when your customers have no choice but to buy them? Why invest in research when you can simply raise prices on people who cannot shop elsewhere? The textile industry tells this story perfectly. Manchester had once been the cotton capital of the world, its mills driving the Industrial Revolution with cutting-edge machinery and efficient production methods. But by the 1880s, American and German competitors were outpacing British factories with newer technology and better organization. The British response wasn't to modernize, it was to squeeze the colonies harder, increase tariffs on foreign competitors, force India to buy expensive British textiles instead of cheaper alternatives. This created a vicious cycle that would define the empire's final decades. Colonial exploitation generated short-term profits that masked long-term decline. British businessmen looked at their balance sheets and saw success, but they were measuring the wrong thing. They were counting money extracted, not value created. They were celebrating cash flow, not competitive advantage. The financial sector fell into the same trap. London's banks had grown fat on colonial wealth, but that wealth was fundamentally unstable. It depended entirely on Britain's ability to maintain political control over distant territories filled with increasingly angry populations. Every rupee drained from India represented not just profit, but future rebellion. Every ton of gold shipped from South Africa created not just wealth, but resentment that would eventually explode into resistance. By the early 1900s, the signs were everywhere for those willing to see them. British exports were losing market share to German engineering and American innovation. Colonial administrators faced growing unrest from educated locals who understood exactly how the extraction system worked. Military costs were rising as the empire required ever larger armies to maintain control over populations that no longer accepted foreign rule. But the most dangerous sign was invisible to most observers. Britain had become financially dependent on the very system that was destroying its long-term competitiveness. Colonial profits weren't being invested in British productivity. They were being used to maintain living standards that British industry could no longer support on its own. The empire had become a massive Ponzi scheme, requiring constant expansion and extraction to pay for commitments it had already made. The Great War of 1914 shattered this delicate balance forever. Within months, centuries of accumulated wealth began pouring out of Britain like water from a broken dam. The government borrowed massive sums to fund the war effort, transforming the world's largest creditor nation into its biggest debtor almost overnight. Colonial revenues that had once seemed inexhaustible were redirected toward buying American weapons and supplies. But even more devastating was what happened to British industry during the conflict. Factories that had been producing consumer goods for global markets were converted to munitions production. Trade relationships built over generations were abandoned as former customers found alternative suppliers. By 1918, Britain had won the war but lost its economic foundation. The lesson is timeless and brutal. Every empire believes its wealth will last forever. Every system convinces itself that extraction can continue indefinitely. But history teaches us that greed, no matter how sophisticated, always devours itself. Britain's fall wasn't caused by enemies at the gates. It was caused by the enemy within, the choice to take rather than build, to extract rather than invest, to prioritize tomorrow's profits over next century's survival. Today's economic powers would be wise to remember that the sun eventually sets on every empire that forgets this truth. This content is for educational purposes only and does not constitute financial, legal, or investment advice. If you enjoy learning how history and money intertwine, subscribe to Empire Economics for more untold stories.